Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the mid-cap index is in the green. The problem is it's been led right now by high beta. So Reliance Infra has moved to the high point. Just pull out the intraday chart of that stock, up about 3% right now. And Bank of India, by the way, Bank of India has seen a lot of short covering out of F&O ban, and that stock is at the high point. If you see the intraday chart, still in the red, but from the lows, quite a bit of recovery. Laurence Balanco of CLSA is now joining us. Laurence, good morning. Thanks a lot for joining us. So the Indian market has broken the 200-day moving average and the recent lows. Do you think it's opened the possibility of a further downtick, a move towards 9,700, or do you think it still requires more follow-through for that to happen?
Yeah, and it is disappointing if we've broken the 200-day, and I'm not getting any signs of slowing downside momentum at this stage. So your next support area is basically the August 2017 and September 2017 lows around the 9,680, 9,700 area. So there is risk of further losses down towards the next support area.
Okay. Good morning, Laurence. Okay, 9680 to 9700. That's a long way, actually. More than a 5% off current levels. No intermediate stops in between?
You know, very, very near term, you've got the 6th of December lows, which is just above 10,000. So, yeah, you've got the 6th of December lows, and then you're down to roughly 3.5% down to that 9,700 area. I mean, even if we fall down to that 9,700, it is worth bearing in mind that the longer term setup for the Nifty, and that's a longer-term breakout when we cleared the 2015 and 2016 highs in March 2017. That still gives us an ultimate upside target of 12,000. It's really just dealing with the short-term weakness that we've seen since the January high in global markets. Unfortunately, India has been one of the underperforming emerging markets, and it looks like that will remain the case, at least in the near term.
Okay, so you're saying that the Nifty chart still indicates the long-term uptrend is intact and there's no possibility of a big reversal, right?
That's right. I think, you know, to me, that 9,700 would likely be the sort of depth of the current short-term weakness for the Nifty, and I'd still think that the 12,000 target is still doable, considering we've held a breakout from the 2015 and 16 trading range.
Okay, so 9,700 on the downside and 12,000 on the upside. That is sort of the range for the Nifty. What about the global markets, Laurence? How are you seeing the charts on both the Dow and the S&P? It's been outperforming compared to at least emerging markets. Do you think that could continue?
Well, I think when the uptrends resume, you'll have emerging markets take the leadership. And despite the volatility that you've seen in January, you know, emerging markets have been able to hold in line with developed markets. I think that's encouraging from an emerging market perspective. I mean, what it is quite clear from the price action since January is that you've got leadership markets sort of holding up in what look like sideways triangle trading ranges, and those patterns suggest that you should resolve ultimately to the upside. And then you've had weaker markets like Korea and Taiwan, where you've clearly made lower highs relative to the January highs. So there is this distinction that you've seen in markets since the January sell-off, and obviously some look a lot weaker through that sell-off, and then you've got the other markets which essentially have been range-bound and holding that. And I'd put the S&P and the Dow in that range-bound triangle range, which should ultimately result to a break to the upside. And we've obviously seen the Nasdaq trade to a new all-time high since that initial sell-off.
Okay. Well, Laurence, just to come back to India for a bit, you gave us some contours for Nifty. What about Nifty Bank?
Yeah, so Nifty Bank's quite similar. In fact, Nifty Bank slipped below its 200-day initial sell-off in January, and here we're looking at supports around the 23,600 area. So, again, a little bit more downside to it. The interesting thing on the Nifty banks is that if we do slip below the lows that we made on the 8th of March, we will likely start to see momentum slow, suggesting that the correction of the January high is mature and then set up for reversal. So basically my message would be any weakness toward 23,600 area would be a buying opportunity. And like we've got 12,000 as an upside target on the Nifty, we still have an upside target around 31,000 on the CNX Banks Index or NSE Banks Index.
Okay, just hold on, Laurence. There's a news that ICTA is breaking up, and that's the reason CIPLA is down about 6%. We have accessed the US FDA observations to CIPLA's Goa unit, which was inspected by the FDA from Jan 22 to 25. And CIPLA is telling us that they are actually procedural and addressable in nature, but the market perhaps doesn't want to believe that, and that's why that stock right now down about 5.5% on CIPLA. So that's the news.
Okay, so we'll get Ekta to come in and give us more details on that 5.5% knockdown. But Laurence, just coming back, you did say 23,600 is the area to watch on the Bank Nifty. Do you track any of the other, sectoral moves? Because we're seeing big outperformance come in, at least from the IT sector this year. Is that something that could continue, perhaps?
Yes, I think so. I mean, I think we last interview sort of talked about some improvements in that the RT sector, and we've seen momentum breakout from that. So definitely signs that the technology sector can sustain breakouts that we saw roughly a month and a half ago, and again pulled to the breakout area on that. The RT sector, I think, would be an interesting buying opportunity.
Okay. Finally, Laurence, what about the dollar? I mean, we normally look at the dollar index, and while it has moved off 88, it is not moving above 90 very sustainably. How would you draw the chart over the next 3-6 months?
Yeah, I think the important thing to note on the dollar index, the break below 91.93 in late 2017 sort of confirmed a major top for the dollar index, and that ultimately suggests a move down to 83. Now, in the very near term, we could see a bounce back to that breakdown area around 93, but essentially our message would be any dollar strength towards 93 should be seen as a selling opportunity, and I think the dollar index trades ultimately down to the 83 area.
83? Okay.
83, yep.
Oh, we haven't seen that in quite a bit.
Okay. All right, Laurence, we'll have to leave it at that. Thank you so much for joining us and giving us your view. So that's a technical view coming in. 97 on the downside and 12,000 on the upside is the view from CLSA.
Oh, yes. I just want to point out, by the way, the market breadth is now significantly improving. So it looks like in the morning itself we had that excess is being taken out. Now 1:1 on advanced decline. But one stock which is now down 6.5% is CIPLA, and of course Ekta has accessed this form 483 and the observations. Ekta, so the nature of the observations, please tell us, because the stock's down 6.5%.
Yes, Anuj, I think there is a surprise element to this. The fact that the Goa plant was inspected in the month of January, where it was inspected from, I think, 22nd to 25th January, was not known to the market, was not known that they had received 7 observations. Plus, remember that this particular Goa unit that you're talking about is one of the most important units when it comes to the US business for CIPLA. So the context of the news, which was not known to the market, has now been accessed, and there's a surprise element to it. You have to understand that from Jan to March, there's a lot of time passed. One is that CIPLA has responded to these observations. 2, they have said that it's a product-specific inspection which has taken place. Third, the fact that these are procedural in nature, and obviously there are, you obviously have to remediate, but they're procedural and addressable according to them. And a very important clarification which I've just got from the management is that they have received approvals from this particular plant post the inspection taking place. So that's indicative of the fact that they, this is probably remediated or solved. But you have to put it into context that these observations were still something that the company had received in the month of Jan. You're just talking about maybe 2 to 3 months ago that they had prepared for this particular inspection to take place. Now, if you're talking about the nature of the observations, the management themselves have said that it is procedural and addressable in nature. But there are maybe a couple of points with regards to OOS, or out of specification investigation, which comes up in the first observation itself. And remember, there are total 8 in number that they've received. Those probably need a little more work according to experts, but I really have to get this analyzed a little more by experts to get a...
It is in the green now, so good time to invite our guests back, Ashwini Gujral, Mitesh Thakkar, and of course Rajat Bose also joins us now. Ashwini, you go first. Thoughts on the index? Quite a bit of short covering, in fact, from the low point. There's a decent recovery on the index. If you look at the Bank Nifty, it's almost 120 points on that. and on the Nifty also sizable recovery. Do you think there could be some more short covering? How would you approach the rest of the day?
See, I had said that the Nifty may recover towards 10,140 thereabouts, the Nifty futures. We are right there. So if you maintain the view that, we are in a strong downtrend, this is just short covering. This is the right time to get fresh short into the market. Your, stop is probably 10,170 thereabouts. And even on the bank Nifty, what you are seeing is basically 100 point off the lows. So even there, I think this is a good time to reassume short positions, because short covering often looks very beautiful, but it tends to end as quickly as it went up. Now, who knows, it can be more than 10,140, but you have to take that view that once you get to strong resistances, the market will at least give you a pullback, if not go all the way down. My sense would be that this 1 hour rally is not going to sustain for a long time, and you'll soon see the bears back, because overall the trend remains down. Having said that, and with that sort of view, Canara Bank is a sell with a, I think this is a good time to reassume short positions, because short covering often looks very beautiful, but it tends to end as quickly as it went up. Now, who knows, it can be more than 10,140, but you have to take that view that once you get to strong resistances, the market will at least give you a pullback, if not go all the way down. My sense would be that this 1 hour rally is not going to sustain for a long time, and you'll soon see the bears back, because overall the trend remains down. Having said that, and with that sort of view, Canara Bank is a sell with a stop of 257, target of 242. Yes Bank is a sell with a stop of 306, target of 292. And CG Power is a sell with a stop of 80, target of 68. Now, obviously, this view depends on the market turning. If the market doesn't turn, then these stocks will be in a spot of bother. But this is exactly the right time where fresh shorts should happen.
Is this a right time to go long on anything at all for the slightly longer term? I mean, the usual Leylands and Z's and stuff like that.
See, there are some stocks where the demand, the earnings, etc., like Motherson Sumi, or consumption type stock. This is a consumption type year where rates are probably going up. Globally, there is trouble, but there is that odd Voltas, Hitachi Home, Johnson Controls, etc. Those sort of stocks which will keep doing well. So something like Jubilant Food, etc. They are kind of defensive in this sort of a market. So that's where you can buy. But overall, the rest of the market is pretty much on the downside.
Okay, got that. So the consumption trend perhaps remains intact. Mitesh Thakkar and Rajat Bose also joined into the conversation. Gentlemen, morning. Mitesh, what stocks would you be looking at, considering that we've seen a reversal now?
Yeah, so I think we mentioned that in the morning 10,050 was a good level to cut short. It's quite oversold and close to an important support level. 10,050 is also the area where we had a swing low on the daily charts on the Nifty a few months back. For the time being, I have two buy calls. Nestle is a buy with a stop at 76.80 for targets of 7,900, and Titan is a buy with a stop at 860 for targets of 893.
Okay, just pull out the intraday chart of Marico, by the way. Again, one of the stocks that we spoke about in our top 10. This is the kind of market where you would see this kind of move happening. Yesterday it was Hindustan Unilever, today it's Marico, and a lot of delivery-based buying yesterday as well, and today as well. As I said, we flagged the stock in top 10, and now you're seeing this move 2.5% higher on that one. So FMCG clearly is the flavor right now.
Okay. Let's invite Mitesh and Rajat as well to give us their thoughts. Mitesh, what's your any specific stock that you would want to look on the long side?
Yeah, so I think I gave two buy calls at the short term, but I think from a position point of view, Ashwini mentioned Motherson Sumi, and that's something which I like a lot. It's a very critical and important long-term support zones of around 300. Many times declines have ended over here, so I think this is a good stock. Keep a stop just below yesterday's low of 301. I think the stock should easily get to about 330 odd zones.
Okay, and Rajat, what about you? What would you be looking at? In fact, you have a sell call on Cipla. I mean, that stock has already fallen quite a bit. What would the targets be now?
Cipla, I suppose whatever had to happen has already happened. When Ekta was giving the commentary at the time, I think it showed some intraday bottom and then trying to bounce back. So I would say that there is no fresh sell call on Cipla. All the targets have been made there. I would rather buy.
Okay.
And there my first choice is Bombay Dyeing. Bombay Dyeing is one counter. Last year, August, after testing its 200-day exponential moving average, it's shot up considerably over the next 4 months or so, and after that there had been volatility, but adequately supported by the 200-day moving average once again, and now it has crossed 200-day, 89-day, 50-day moving averages, even above its 13-day moving average now. So probably we will see a good upswing here, at least in the short term. 275 to about 279 is my target. It's a 2-day target, and Bombay Dyeing looks good. In fact, I'm expecting it to taste 295 to about 320 going forward, irrespective of the market condition. And the other stock that I would like to mention out here is D-Mart. D-Mart, the kind of recovery that it has shown in today's session suggests that there is good amount of short covering, and probably that short covering will take it up once again to 1350 to about 1365 kind of levels. I would put a stop loss at 1298. And if you allow me to add, take Mahindra, the tech stock, where I feel you put a stop loss, you put a stop loss below say 615, and on the upside 632 would be the target. Prior to that, 628 is an interim target.
Okay, by the way, just want to point out intraday chart of NIIT Tech. Just look at that. That stock, of course, had a bit of a correction, but obviously the leader in the pack, and just look at that, back to its winning ways. Ashwini, quick chart check on NIIT Tech.
See, it's just hit its 20-day moving average, which is rising, so kind of works as a support. But in this kind of a market, it's very difficult to buy stuff and expect it to go to new highs. If you're a portfolio type investor, maybe you can hold on, but I don't think this is a great trading buy, because if the market turns, I think techs will again face the heat.
Is it a trading buy in Infosys at all, Ashwini?
See, for trading buys, you need a strong market, a strong trend. Even the Nifty IT, it fell 250 points yesterday.
Okay.
Right now, it's up hardly 100. So everything goes for a toss, when the market starts to break the 200-day moving average.
Okay, gentlemen, thanks for joining us. So clearly 2 pockets are looking good, the IT space as well as the FMCG space. So a lot of defensive buying seen there. But let's find out what's been happening with commodities this morning. Manisha Gupta joins in with a quick roundup of all the action there. Hi Manisha, good morning.
Morning, and thank you so much for that, Sonia. Well, there is contradicting fundamentals when you look at the crude oil prices. On one side, of course, it's high inventories from US which continue to weigh. It also has to do with the global cues, which are not very strong for most asset classes right now. But then there are tensions between Saudi Arabia and Iran, and there are a lot of statements flying in from both the countries and other countries as well. And that's perhaps adding some premium to prices. Positive opening on your screens, 0.1%, if that's much to count for. The gold and silver prices in the meanwhile did see some gains yesterday. The global equity market sell-off has been supportive, and we did see the gold prices come back all the way from 1307 off a low to 1317 in the Asian markets right now, but hasn't been able to hold on to those levels. So 0.25% down yet again, and this market of course is choppy ahead of the US Fed meeting that kickstarts today, and these markets are waiting for the guidance outlook for the rest of this year in sense of interest rates, inflation, jobs data, etc. No such luck for the metal space. We continue to see declines onto that one. It actually is a 7th straight day that you have seen decline come in for the metal prices, and it only gets sharper and deeper on the lower side. So as you can see, we are making lower lows here. It's a 2-week lows in case of copper prices. Aluminum is trading at a 1-month low. You have nickel prices, which actually have declined by 3% in this week itself. And when you look at the Shanghai metals, we are trading nearly 2 to 3% lower for many of those metals there. If you, it is a 4-month lows actually coming in for zinc, copper, iron ore, steel, all of those prices in the Shanghai markets. So very deep cuts is what you continue to see in that space. Trading strategies, we have them from KDR Commodities. They actually have a sell call for most of those commodities. For gold prices, they're looking at targets of 30,150 on the lower side. They also have a sell in copper with targets of 450.5 for the day today.
Okay, thank you very much, Manisha, for that. We take a quick break. We are back with some corporate giants as well, discuss markets.